We all have important goals in life. The question is, how do we achieve them? First, you need to know what kind of goals you have. Paying for your groceries or monthly bills is a short-term goal that you need to satisfy quickly, perhaps within a month. Buying a car or spending for that family vacation is a medium-term goal that you want to achieve maybe in a year or two. Securing your dream retirement or your children's college education is a goal that you aim for in, say, 5 to 10 years. This is a long-term goal. Next, choose the appropriate investment tool for your goals. For short-term goals, you only need to invest for a short period of time, like a savings account. For medium-term goals, your investment period is a bit longer, making the time deposit adequate. But for long-term goals, you need a financial tool that can give you higher returns and can maximize your money's growth potential over an extended period of time. Hence, an investment plan is ideal. Money for your long-term goals must be invested in long-term financial assets, which earn more than short-term vehicles. Simply put, you have to match your goals with your investments.
The key is to understand how much money will I really touch in the next 5 years, in the next 10 years. If I have objectives of bringing my kid to school, education, buying a house in the future, putting up my own business, or coming up with retirement money, the key is to have a long-term objective be matched with a long-term instrument. And you get two things here. One, get a higher yield. Two, a better disciplined track because you can touch it. The key towards earning money is keeping it. A lot of people earn money, but because after they earn and it's short term, they take it out and spend it. You cannot get that back when you spend. So the key is to invest and keep it in that investment. So discipline and program discipline is a must in long-term investing.
How much does your money earn in a bank deposit? Bank deposits currently offer annual earnings of only 0.25% for savings and 1.5% or less for time deposits. With 2.6% inflation, this means your money is actually diminishing in purchasing power. To grow your money over time, you need to do two things. First, choose the right investment tool that can offer returns higher than inflation. And just as critical, know where to grow your money. Where is the best place to invest? Right here. The Philippine economy is now the fastest growing economy in Asia and is expected to be the 6th in the world. Our GDP has grown substantially, driven by domestic consumption. The Philippine stock market has grown faster than foreign stock markets. And now, the Philippines has been upgraded to investment grade. An investment grade rating is a seal of good housekeeping and a resounding vote of confidence in the Philippine economy.
Stock markets rise as economies grow, and the Philippines has been no exception. Just this year, the benchmark index recorded several historical highs. That means that anyone who would have invested in our market at any time in our history would have invested wisely. The Philippine stock market has been offering more than decent returns for Philippine stock market investors.
Well, in terms of growth, the momentum is definitely there, and I think we will still see many more years of continued growth. We have done a lot of work and laid the foundation in the real economy. Government, private sector participation is very well intact. So we should see the benefits accruing to our economy, and that should also lead to more investments, not just from our local investors, but from foreign investors as well. I would still say that our local fundamentals, the macroeconomic factors that we have seen going for our country are still very much intact. And so that even with these global uncertainties, there is a very big chance that we can move forward.
With the country aggressively developing, you have the opportunity to ride on the growth of the Philippine economy. That's why Philam Life has a unique product called Money Tree. MoneyTree is a one-pay investment and life insurance plan that gives you the opportunity to invest in funds expertly managed by Philam Asset Management that take advantage of the Philippines' booming economy. MoneyTree grows your money better than banks. No matter which fund you invest in, MoneyTree can grow your money's value over the long term better than bank deposits. Over the past 10 years, PAMI funds have grown 9% to 21% per year. To demonstrate MoneyTree's higher earnings more clearly, let's look at a time deposit investor and a MoneyTree fund investor. In 2003, both invested 1 million pesos each. After 10 years, how much did their investment earn? After 1 year, the time deposit investor earned 5.25%. He rolled over his investment for 1 more year and earned 6.26%. He continued to roll over his investment, and by May 2013, the time deposit investor earned only 396,000 pesos. On the other hand, the MoneyTree fund investor earned more than 5.5 million pesos. That's 5 times his initial investment. This means that had the time deposit investor invested his money in MoneyTree funds instead, he could have earned 5.1 million pesos more. MoneyTree also allows you to gain from the expertise and experience of PAMI, which actively manages your portfolio to provide you superior yields on your investment. Over the years, PAMI has gathered multiple awards from both international and local investment organizations, proving its expertise in fund management. This has enabled the PAMI Philam Strategic Growth Fund to outperform the Philippine stock market. Is there a right time to invest in MoneyTree? Let's see. Here are 2 investors. Client A invested 1 million pesos just before the global financial crisis in October 2007. When fund values dropped by 47% the following year, he did not pull out his investment as most people would have done. As of May 2013, his investments grew to 2.02 million pesos, a return of 14% per year after 5.5 years. This simply shows that there is no wrong time to invest in MoneyTree. Even when the market is down, the economic trend has always been to recover and grow. You just have to be patient. Now here's client B. He invested 1 million pesos after fund levels recovered from the global financial crisis in July 2010. As of May 2013, his investments amount to 1.95 million pesos, a return of 31% per year after 3 years. This shows that it's never too late to invest in MoneyTree. Even if you invest after the economy has regained its momentum, your money will still keep earning as the economy continues to grow even stronger. Again, it is simple. Don't panic. Be patient. Have a long-term outlook. Also, don't be disheartened when your money's growth fluctuates temporarily. When you look at market risks from a long-term perspective, you can see that the economic trend is generally upward, lessening the impact of fluctuations over the long term. MoneyTree is indeed the wise investment tool. You can grow your money's value over the long term better than bank deposits. Ride on the growth of the Philippine economy. Gain from professional fund management of Philam Asset Management. And on top of all these, you can also protect your family with life insurance. MoneyTree can make your long-term goals happen. Basta't may plano, kaya mo yan. So don't let your money sleep. Grow it with MoneyTree. Anong plano mo? Usap tayo.